Hello students, in present video I am going to explain about 10th problem from final accounts topic. I am taking this question from Telangana State Telugu Academy Intermediate First Year Accounts Textbook. Let us see the question first. In final accounts, first we have to prepare trading account and profit and loss account. Then balance sheet. First two accounts in one table only we have to prepare. First trading account, continuation, profit and loss account. See the heading? Trading account, comma, profit and loss account of Raghavendra Traders for the year ended 31st March 2019. Two sides, debit side, credit side. To indicate DR, CR symbols we should write. Debit side, particulars, amount columns, credit side also same. So you know the difference between trading account and profit and loss account. In trading account, direct expenses, direct incomes we should write. In profit and loss account, indirect expenses and indirect incomes. Direct expenditure means the expenditure which is incurred till manufacturing of a product. So indirect expenditure means after manufacturing expenditure, like administration expenditure, selling expenditure, finance expenditure, for example interest paid, etc. Direct income means main income for the organization, nothing but sales. Other incomes come under indirect incomes. See the question? First trading account. No? Trading account we have to start with opening stock, debit side. In question, opening stock 10,000 is given now. Debit side when you are writing with 2 we should start. 2 opening stock, amount 10,000 rupees. Next, purchases. So purchases, raw material we buy, after purchase we manufacture. Means purchase expenditure is still manufacturing, it comes under direct expenditure, trading account debit side. 2 purchases. Before writing the amount, we should see whether purchase returns are given or not. Purchase returns will be given on credit side of trial balance. Credit side, purchase returns are not given. But in adjustment, 6th point, goods worth 5,000 rupees withdrawn by the owner for his personal use. So this point is related with the purchases. Firm purchased goods. From these purchases, owner withdrew some goods for personal use. So purchase value decreases. No? Therefore, these drawings from purchases we have to subtract. Therefore, purchases amount in inner column because adjustment is there. 15,000 rupees minus owner is withdrawing goods for personal use. So for personal use, when owner withdraws money or goods, it comes under drawings. Therefore, minus drawings. In adjustments, drawings amount is given as 5,000 rupees. Remaining amount in outer column, 10,000 rupees. Continuation, drawings, carriage inward. So carriage inward, carriages. Carriage on purchase, all are same. Carriage inward means what? We transported goods from supplier's place to our godown. So we purchased raw material. So from supplier place to our place, to bring that raw material, we spent expenditure. So after bringing that raw material, we manufacture. Means this expenditure is still manufacturing. Means direct expenditure, trading account debit side. 2 carriage inwards. No adjustment. Therefore amount in outer column 800 rupees. Next, salaries not here. Wages. Wages we pay to labor. So labor work in factory. Factory related expenditure is direct expenditure because in factory only we manufacture goods. So this is manufacture related expenditure. Therefore trading account debit side. 2 wages. No adjustment. So amount in outer column 3,200 rupees. Postage, bills receivable, furniture, insurance, Xerox charges, journal expenses, machinery, bank charges, trademarks, advertisement expenditure, import duties. we import raw material from other country. So in airport or seaport, we have to pay tax to the government. No? That is known as import duty. After paying the tax, we bring the goods and we manufacture. So this is also direct expenditure, manufacture related expenditure. Therefore, trading account debit side. To import duties, 1,250 in outer column. Coal and water, we use this in manufacturing process. So direct expenditure, trading account debit side. 1650, debtors, bad debt. So debit side of trial balance completed. Come to credit side. Sales, purchases, debit side we are writing direct expenditure. Sale is a direct income. For any organization, sale is the main income now. So it comes under direct income, trading account, credit side. And before writing sales, we have to see whether sales returns are given or not. In trial balance, debit side equals sales returns. Search for sales returns, not given. Therefore, sales directly in outer column. Credit side, with the buy we should start. Buy sales, 40,000 in outer column. Next, interest, commission, capital, creditor, reserve for bad and doubtful debt, interest on drawings, dividend received, bills payable. No other amount. Come to adjustments. Closing stock value 7,500. Opening stock, debit side we wrote now. So closing stock, credit side we should write. Our present year is 31st March 19 is the ending date of the year. Means starting date is from this date, count 12 months before. 1st April 2018. On 1st April 2018, in our firm we have 10,000 worth of stock. That is opening stock. At the end of the year, on 31st March 19, in our firm, we have 7,500 worth of stock. This is called closing stock. Opening stock debit side, closing stock credit side we should write. So buy closing stock, 7,500. Remaining points don't come in trading account. So related to trading account, everything is completed. Finally, we have to calculate gross profit or gross loss. Further, two side totals we should calculate. See, credit side total is more than debit side total. In rough notes, first credit side total we should write, then debit side total. Credit side total is and debit side total 26,900 rupees. Then the difference is 20,600 rupees. Credit side we wrote income, debit side expenditure. Income total is more than expenditure total. Therefore, this final answer is profit. This profit is known as gross profit. We said we should write this amount where the total is less, that side. So debit side total is less now. Debit side, write down this gross profit amount, 20,600 rupees. For this answer, we have to write to gross profit. Two sides, highest amount we should write. Credit total is 47,500 now. Credit side. Debit side, till here, total is 26,900. Difference also we wrote now. So if you add all these amounts, same total comes 47,500. So remember, this debit total we should not write anywhere. Credit total, highest amount, two sides as a total, and this answer difference amount as a gross profit, debit side we should write. So this debit total 26,900 we should not write anywhere. With this, trading account is completed. Continuation, profit and loss account. How to start? Debit side gross profit is there now, that amount. Credit side we should bring. Suppose debit total is more, credit total is less. Then the difference is gross loss. Gross loss, credit side we should write. In that case, that gross loss amount, debit side of P&L account we should show. So here place will not permit me. Therefore, I will rub this trading account and I will show you the profit and loss account. First trading account, take a screenshot of this. So continuation is profit and loss account. We'll start it with gross profit on credit side. By gross profit, 20,600. So what is the rule? Debit side indirect expenditure, credit side indirect income. Again trial balance debit side. Opening stock completed, purchases, drawings, carriage inward, salaries. Salary is indirect expenditure because we pay salaries to employees. Employees work in office. This is after manufacturing expenditure, administrative expenditure. So debit side to salaries. Adjustment is given, therefore salaries amount in inner column 7,500. Adjustment number 4. Outstanding salaries 1500. More 1500 we have to pay. So outstanding we have to pay, no? Therefore we should add plus outstanding 1500 rupees. Total in outer column 9,000. Next, wages completed. Postage means postal charges, not related with manufacturing, no? So this is also indirect expenditure. Profit and loss account debit side to postage 5,100 rupees. Bills receivable, furniture, insurance. Firm has taken insurance policy. So every year we have to pay premium, no? Insurance means actual meaning is we paid insurance premium. Indirect expenditure debit side. No adjustment to insurance 2,000 rupees outer column. Xerox charges administration expenditure debit side 300 outer column. General expenses administrative expenditure indirect expenditure profit and loss account debit side to general expenses 1,700. Machinery is an asset, but related to machinery there is one adjustment. Adjustment number 2. Depreciation on machinery 10%. So when we use that fixed asset continuously, asset value decreases. So that is called depreciation. Indirect expenditure. Debit side of profit and loss account. 2. Depreciation on machinery. Percentage is given, no? Therefore on machinery value we have to calculate this. Depreciation rate 10% and the machinery value is 30,000. Therefore 30,000 into 10 by 100. Percentage means by 100. So one numerator, one denominator we should cancel. 30,000 is the numerator. So 30,000 divided by 1 will be there, no? 30,000, 100 we can cancel. 10 and 100 we can cancel. First common zeros remove. Numerator 0, denominator 0. Numerator 0, denominator 0. Finally 3,000 is the depreciation in outer column. Bank charges. Bank provides so many services to our firm, not at free of cost. Time to time they take charges. So for us this is an expenditure and not related with the manufacturing process. So this is indirect expenditure. Profit and loss account debit side. Bank charges 1,000. Trademarks, advertisement expenditure. So sales related expenditure, no? Indirect expenditure here only. To advertisement expenditure 2,600. Import duty, coal and water completed. Debtors, bad debt. So debtor related bad debt adjustment is given. Debtor means from them we should receive money. So we gave loan to them. Now they have to pay that amount to us. And in trial balance, bad debt is given 600. Then trial balance credit side, reserve for bad and doubtful debt is given 2,500. And in adjustment number 5, further bad debt 400 and a provision for bad and doubtful debt 5%. So in trial balance, bad debt is given, provision for bad debt is given. In adjustment, again bad debt is given, provision for bad debt is given. So bad debt means what? From debtors money is not going to come. Loss. Provision for bad debt, also known as reserve for bad debt, means what? From debtors money may come, may not come. We are expecting that from debtors money will not come in future. So as per conservatism convention, nothing but prudence convention, expected losses we should record in the books. Therefore, this expected loss we want to record in the books. That is known as provision for bad debt. So in trial balance, one provision for bad debt is given. In adjustment, again he is giving the same. First, bad debt. So in trial balance, one bad debt is there. In adjustment, one bad debt is there. Both are losses. Losses, profit and loss account debit side we should show. Therefore, both we have to add and we should show. Two bad debts. First, trial balance amount 600 rupees. To this, in adjustment, again bad debts are given. We have to add it. And what to write for that? Additional, extra. Adjustment bad debt amount 400 rupees. Total bad debt 1000 rupees in outer column. Now come to reserve for bad debt. See, in trial balance, he is giving 2500. So trial balance amount is nothing but opening PBD, year starting PBD. Nothing but 1st April 2018, we provided 2500 PBD. And in adjustment, 5% is given, no? Amount is not giving. So this adjustment PBD amount is not given. We have to calculate. That is what? Closing PBD. Means 31st March 2019 PBD. First amount we will calculate. On debtors we have to calculate. Debtor value 40,000 rupees. From this, first what we should do? Adjustment bad debt we should minus. See, trial balance bad debt we should not deduct, because in trial balance when bad debt is given, meaning is already it is deducted from debtors. After deducting 600, remaining debtor value 40,000. In adjustment bad debt is given, means this amount not yet deducted from debtors. Therefore now we have to deduct. Minus adjustment bad debt 400 is equal 39,600. This is the net debtor value. On this adjustment PBD 5% we should calculate. 5 6 are 33. 5 9 are 45 plus 3, 48. 4 is there. 5 3 are 15 plus 4, 19. 1980. What is the meaning of this? Last year, nothing but this year starting date. We thought that from debtors 2500 may not come. Therefore, from last year profit, we saved 2500 rupees to meet that loss. This year ending, we came to know that this much is not required. 1980, if you keep to meet this bad debt loss, that is enough. Means last year extra we have saved. So how much extra we kept aside towards provision for bad debt? 2500 minus 1980, 520 rupees. So 520 extra we saved last year, not necessary. So now what to do? To current year profit, that 520 we should add. See, profit and loss account is a nominal account. Debit side expenses and losses we are showing, credit side incomes and gains we are showing. Therefore, whatever we show on credit side, because of that profit increases, and because of debit side amounts, profit decreases. Now 520 we want to add back to profit, means profit increases, means 520 we said we should write credit side. So simply how you should remember? Trial balance amount 2500, adjustment amount 1980. When provision for bad debt is given in trial balance and adjustment, then in profit and loss account, we should not write a trial balance amount, we should not write adjustment amount. Difference we have to show. Difference is 520 rupees. We said we should show, as a rule you remember, if a trial balance amount is more, that a difference credit side we should show. If adjustment amount is more, difference debit side we should show. Now trial balance amount is more now, Therefore, provision for bad debt we have to show on credit side. In trial balance, he is giving reserve for bad and doubtful debt. We also use the same word. By reserve for bad and doubtful debts. From 2500 we have to subtract 1980. Therefore, first 2500 I am taking. 2500 minus 1980. In outer column, 520 rupees. And how this 1980 came? Show clearly here. Debtor value 40,000. From that, adjustment bad debts we have to subtract. Then the remaining value 39,600. On this 5%. 396 into 5 is equal to 1980. Put this calculation part in brackets. Finally, reserve for bad debt in outer column 520 rupees. Again come to trial balance. So debit side completed. Come to credit side. Sales, interest. Credit side interest is given. Means interest received. Indirect income. Profit and loss account credit side. By interest received. No need to write received word because in trial balance received word is not there. Interest is enough. 2,800 rupees. Next, commission. Commission also credit side is giving. Means commission received. Indirect income credit side. By commission. Adjustment is given. Therefore, commission amount in inner column 3,200 rupees. Adjustment number 3. Commission received in advance 1,000 rupees. Received in advance means what? Next year amount now only we receive. In profit and loss account, only current year amounts we should show, not next year amounts. Therefore, if any next year amount is included in current year amount, we have to exclude that. We have to subtract that. Therefore, received in advance, we have to subtract. Adjustment amount 1,000 rupees. Current year commission amount 2,200 in outer column. Next, capital, creditors, reserve for bad and doubtful debt completed. Interest on drawings 1,500 rupees. See, interest on drawings. First drawings means what? From the firm, owner is withdrawing some money for personal use. So interest on drawings. Who should pay to whom? Owner is taking money from the firm. Therefore, owner should pay to firm. In firm books, we are preparing accounts now. Think from firm's point of view. To the firm, interest is coming, means income. Therefore, credit side we should write. Now the doubt is, owner's money owner is taking. For that, why he should pay interest to us? Because to discourage him from taking more amount in the form of drawings. See, he brought capital to run the business. So we need that money in the business. To meet day-to-day expenses, we need that amount. If owner is withdrawing that amount in the form of his personal use, how to meet day-to-day expenses in the firm? So some sort of discouragement procedure should be there. That is why interest on drawings concept is given. So whenever owner takes some money for personal use, he should pay interest to the firm. Therefore, when really necessity is there, then only owner withdraws money for personal use. Interest on drawings, credit side. Amount directly given 1,500 rupees. Next, dividend received. This is sole proprietorship business. See, Raghavendra Traders, only one owner. So we purchased public limited company shares. Tata company, Reliance company, their shares we bought. Then regularly we get dividend. So for our firm, this is indirect income. Credit side of profit and loss account. By dividend received 2,100. Bills payable not here. Trial balance amounts we have taken. Once we will see adjustments also. Closing stock not here. Depreciation completed. Commission received in advance over. Outstanding salary completed. Further bad debt 400. and provision for bad and doubtful debt 5% completed. Goods worth 5,000 withdrawn by the owner for his personal use. We have taken in trading account. It doesn't come in profit and loss account. So related to profit and loss account, everything we have taken. Now finally, like trading account, here also two side totals we have to calculate in rough work. Credit side total is more than debit side total. Difference 4020 is profit, no? Because credit side we wrote incomes and gains, debit side expenses and losses. Now this profit, debit side total is less, therefore debit side we should show 4020. For this answer, what to write? In trading account we wrote gross profit. In profit and loss account we have to write net profit. To net profit. Two side totals, highest total we should write. Credit total is highest, no? 29,720. Two sets. Take a screenshot of profit and loss account. So close the table. Trading account, profit and loss account. Both are completed. Next, balance sheet. This is balance sheet. Heading, balance sheet of Raghavendra Traders as on 31st March 2019. For trading account and profit and loss account, we are writing for the year ended. For balance sheet, we have to write as on. Means on this date, we are preparing balance sheet. Liabilities, amount, assets, amount. Balance sheet is only a statement. It is not an account. Therefore, don't write DR symbol, CR symbol. Don't start with the TO2 here and BY by here. First debit side. Opening stock purchases, drawings, carriage inward, salaries, wages, postage, bills receivable. Bills receivable is an asset, no? Asset side. 6,000 rupees. Furniture. Furniture is also an asset. No adjustment. Amount directly in outer column. 15,000 rupees. Insurance, Xerox charges, journal expenses, machinery. Machinery is an asset. Adjustment is there. Therefore, amount in inner column 30,000 rupees. Adjustment is depreciation. No? Adjustment amounts two times we should write. One time depreciation pre and account debit side we wrote. Second time in balance sheet asset side. Depreciation we have to deduct. Minus depreciation. No need to show the calculation here because in profit and loss account already we have calculated. 3,000 came now. That amount directly write down here. Remaining amount in outer column. 27,000 rupees. Bank charges, trademarks. Trademark means what? Logo, sign, which represents that this particular product belongs to our firm. So this is treated as an asset because trademark creates goodwill for our firm. It represents our reputation. So if any other firm wants to use our trademark, then we can give permission to them and we can collect fees also. Means trademark generates income also. Therefore, it is treated as an asset. It is an intangible asset. Means we cannot touch it, we cannot see it. Trademark 12,000 rupees. Advertisement, import duty, cold water, debtors. Debtor is an asset, no? Adjustments are there. Therefore, debtor amount in inner column 40,000 rupees. And what is the adjustment? In trial balance, bad debt is given 600. So as I said earlier, bad debt of trial balance means already it is deducted from debtors. Therefore, again we should not deduct. In trial balance, credit side, reserve for bad and doubtful debt is given. So that is also trial balance amount, no? We should not deduct here. But adjustment amounts means not yet deducted. Therefore, now we have to deduct. In adjustment, two amounts are there, no? Bad debt is given, provision for bad debt is also given. Both we have to subtract from debtors. First, bad debts we should subtract. Adjustment bad debt amount is 400 rupees. Remaining value in inner column minus adjustment reserve for bad and doubtful debt 1980. Then the final amount in outer column 37,620. Bad debt debit side completed. Come to credit side, means here liability side. Sales, interest, commission, capital is a liability. At the end we will show that. Creditors. So we are taken loan from them. We are liable to them. Therefore, it is a liability. No adjustment. 7,600. Reserve for bad and doubtful debt, interest on drawings, dividend received, bills payable. Bills payable is a liability. 10,000 rupees. Trial balance amounts completed. Come to adjustments. Closing stock value, closing stock asset. At the end we will show. Second point, depreciation on machinery completed. Second point, depreciation on machinery completed. Third, commission received in advance. One time in profit and loss account from commission we have subtracted. Second time in balance sheet it comes. So next year income now only we received. Means without giving benefit we received amount. So we are liable to other party. For us it is an obligation. It is a responsibility. Therefore liability. Commission received in advance. Amount 1,000 rupees. Outstanding salaries 1,500. One time in profit and loss account to salaries we have added. Second time in balance sheet it is also a liability because we have to pay salaries to employees. This is also an obligation. No? Outstanding salaries 1,500 rupees. Fifth point, further bad debt 400 and provision for bad and doubtful debt 5%. Completed. Sixth point, goods worth 5,000 withdrawn by the owner for his personal use. So this is drawings, no? Drawings to capital we have to adjust. So everything we have taken. Finally, asset side, closing stock is there, no? Write down that. Closing stock 7,500 rupees. Liability side, come to capital adjustment. Capital, inner column, 90,000 rupees. To this, in profit and loss account, our answer is net profit, no? Net profit we should add to capital. Plus net profit 4,020 rupees total minus two drawings amounts are there. So one amount in trial balance debit side he has given drawings 4,000. Here the meaning is owner withdrew cash from the firm for personal use. And another drawings are given in the adjustment, no? Sixth point, goods worth 5,000 withdrawn by the owner for his personal use. These two drawings amounts we have to subtract here. Minus drawings. Trial balance amount 4,000 rupees plus adjustment drawings 5,000 rupees. Total 9,000 rupees. Final amount in outer column 85,020 rupees. Interest on drawings is given in the trial balance. You know? That amount in profit and loss account credit side we wrote, but we are not taking here because trial balance amounts only one time we should write. That one time in profit and loss account already we wrote. So why not here? Because in trial balance he gave means what? From capital already they have deducted. So interest on drawings to drawings we have to add. In other words, from capital we should subtract. If interest on drawings are given in the adjustment, then from capital we will deduct here. But it is given in the trial balance, no? That is why I am not subtracting from capital. So everything we have taken. Finally, two side totals we should calculate. Liability side total 1,05,120 rupees. Asset side also same total. Thus, two sides total should be same. Then only a problem is correct. So this is all about 10th problem from final accounts topic. Hope this video is helpful to you. Thank you.